Good morning. This is Wednesday, February 8th, Data Trader Pro with a pre-market wrap. This is going to be brief this morning. I was going to do one longer one last night, but really the markets are just stuck in the mud right now. We'll start briefly with some market sectors. Energy space is the big news today. Natural gas back down after a dead cat bounce. Natural gas hit roughly the $3 level. That is a very key support area. If it breaks it, it's going down to probably the 260 to 280 area to find major support, which would be roughly the 50% retrace of the entire rally from the 160 all-time low to this winter's 390-ish high. But it's weak. Oil really collapsed yesterday and had about a $3 move down. So energy space is very weak. Natural gas really has nothing to do with the rest of the market, but oil might. So oil might hold things back a little bit, right? So other than that, yesterday we had a bit of a rally, especially early in the day, that was capped. Market internals were very weak. We posted a tweet on that at the time. Said in the live chat room that a reversal was quite likely, given the market was getting ahead of breadth significantly, and it did pull back. We had a reversal back to pre-market levels, so we took back the whole rally. And then didn't really make any additional progress from there. So today we're opening flat. Pretty much right where we were yesterday, so not much can be gleaned from that. If we go to the daily chart, we'll see sort of where we are on. This is a chart of ES, a daily chart of ES. We've had a few days of rally, and then we had this 13-day consolidation. We've had a 2-day rally. We've had 6 days of backfill. We've rallied back up to where we were here, but we've made no further progress, and now we're in our 3rd day of consolidation after a 1-day sort of bullish trend day. So so there's your pattern: is 2 to 3 days up, 13-day consolidation, 2 days up, 6-day consolidation, 1 day up. And what's going to happen here, we're not sure. But the market seems to be running on fumes, at least in terms of internals. They're not. This isn't a widespread rally where they're buying everything. Not at this point. So this starts to happen in the later stages of a rally phase, where the breadth deteriorates and things don't look so hot under the hood. It doesn't preclude another spike up, but it means that you're doing it on divergent breadth internals, and it's likely to coming to the end because they're not buying 4,000 out of 6,000 stocks, for instance. They're buying just a few momentum issues to keep the rally going, and then they're unloading on highs generally, but it takes a while. There's a pattern of distribution at the highs, and we're starting to see some of that, but I'm not convinced that every move, every squiggle to the upside is over yet. We'll see in the next day or two. Okay, so let's move on. Yeah, so this was were our internals yesterday. So we rallied on flat to negative internals. So only the Nasdaq 100 internals remained high. Russell 2000 was bearish. It finished down. Dow was slightly up, but that's only 30 stocks. We covered the exchanges. Exchanges, NYSE and Nasdaq combined, were negative. So not a lot of progress was made there. On the block trades, this is where we're getting stuck right now. Okay, so we've had a cluster of buys. We had all the late buy prints. Sorry, chart reset itself. We have all the late buy prints as support. So this is your support, 227.79 on SPY. Popped up, started to distribute the highs here, sold, confirmed by late sell prints. We had a really big print, biggest print we've had in a little while, 4.6 million right here at 228.93, and then all these late prints roughly the same level. So we can't we're stuck essentially between the 227.79s and the 229.44 level, with lots of big prints in the middle, which is a little bit unusual, but it's not a massive range either. It's a fairly narrow range. It's a little, it's a less than $2 range. So so a move is going to come out of here. It's just whether it's going to break these prints and go up, or whether we're going to go back and test support on the lower prints, or even break below them. So really down here, 226.84 ish is your immediate lower support for that. So the picture on QQQ is we've definitely had sells on the highs, but those came from quite a lot of buying below. So again, we're stuck right in this tight little range up at top. So QQQ above, what's the number here? Sorry about that. Above 126.44, I would say, or below 125.86, we can get a move, and then we would test lower support 124.58. Okay, but again, stuck high, tight consolidation, stuck between the prints. So we're looking for a breakout or a breakdown. Same thing on SPY. We don't know what's going to happen, since when range compresses and you get a lot of prints, you're just waiting for something to happen essentially. All right, looks like we had a bad print on IWM. That's going to mess up the chart. I'll have to clean that data point up later because it'll mess up the chart. Yeah, like it is now. Anyway, so you've got a lot of late sells on your 135.80 level, and you've got 135.28 roughly, some buys. So again, similar picture, stuck. This print is making the chart not on the vertical axis isn't correct. But anyway, your biggest print lately is your 135.15. So I guess that's a line in the sand of sorts. Okay, the Dow. I mean, look at what's been happening. I mean, you sell on the highs, you got some buys on the lows, and you come up and what looks like further sells on the highs, but then there's a late buy print just to confuse us. I mean, we're just meandering in range here. Okay? This is just sort of these are consolidation moves. These aren't the moves of starting a new trend just yet. So we're just going to have to wait and see what happens. The volatility space is interesting because some big players have been, every time VXX hits a low, there's been millions of prints. Some big prints up there. In volatility, you tend to get a small pop, and then it'll run right back to where it was, and usually even make a new low because of the decay inherent in the fund. So what's happening? But there's still lots of large block trades on lows. So we got a new low, another 1.1 million. It seems to be the size. Somebody's buying 1.1 million, 1.1 million, etc. So there will be a volatility move brewing. We're way overdue for volatility move, but VIX expiry is next Wednesday at open, so in 1 week's time exactly. So we may be a little late in the cycle for a huge move. We'll see. I'm not sure. OPEX certainly next week as well, after VIX expiry this cycle. So we'll just have to wait and see. But it looks to me like somebody's been accumulating. There's a lot of shares on the lows, and when somebody's been shorting this, or at least selling the pops, you'll see the large prints on the high. So you see a large buy print and then a large sell print on the high, but we haven't seen that. So it looks like somebody's holding and building a fairly large position over time. I mean, this started at the $20 level, so somebody's willing to hold, it looks like, and accumulate through a drawdown. They may think that there's a significant move coming, so I'm not in argument with that. So UVXY, the decaying beast, not much can be gleaned. Again, some similar picture, some buys. They don't get the same size prints as UVXY, but there's been some accumulation. But it had its reverse split, and it's just been decaying ever since. So XIV, looks like the highs have been sold, but not in huge numbers yet. So we're just going to have to wait and see. Well, we're pretty much stuck on everything right now. Okay. All right. So what's happening with the dollar? The dollar's been a key instrument in all of this, and our last reasonable size print was up here 25.97. But what happened earlier, I think it's off the chart now because it was a couple weeks ago, we had an enormous print, 3.7 million, which is enormous for UUP, which is the most liquid dollar-based ETF. It's based on the DX basket. 3.7 million at 26.03, and we've been down ever since. So we keep coming back up, attempts to test that level, and we sell and we drop, and there's been some accumulation here, and we come back up, but we haven't really tested that level yet. So 26.03 area on UUP, and really, can the DX index, which is this U.S. dollar index, which is a basket of currencies against the dollar, predominantly the euro. The euro is about, I think, 56% of it, and then the yen is about 13-14%, and so on, and then a whole slew of other currencies. But this has been down, and really, under 100. 100 is roughly, it's 100.7 has been your line in the sand for a while, but really I think the key support, the line is about 100, right? So in DX, so is this going to finally break out and make a bullish run and finish off its move to the upside? I don't know. It's definitely going to have an impact on commodities. Whatever it does. So you're getting wild swings in oil, big drop. These things aren't 100% correlated, but oil's priced in dollars, and if dollar changes quite a bit, it's going to have some effect on the price of oil and the price of other commodities. So so we're the market seems like it's been waiting on the dollar to decide what it's going to do, and it's just been chopping around in an area waiting for that to happen. So, okay, so back to the block trades, and we'll see if we can wrap up. All right, so bonds, TLT. The picture in bonds has been that there was an enormous sell-off from the highs of the summer. And then there was an enormous block trade down at 117 that stopped the market dead in its tracks. There was a huge buyer, and that stopped the down move. So we've been up ever since then, but it's been a choppy up move. We had another very large print here at 119.06, and we've been, there was a corrective move up, a bit of a backfill, and then this huge print. So, I'm looking for us to stay above here, 119.06. If not, if we break below, we're going to go back to the 117 area, I think, to retest that breakout. So we'll just see. But we're quite a bit higher already. So I think that that should be our support, and I think bonds might have some legs left in them. Okay, all right. Metals. Everybody's talking about metals. Picture on metals is, you look like this rally was going to have a pullback here with some sells. It had a minor pullback and then just kept going. People kept, we broke above here, and then there was just buys, and maybe additional buys here, and we may have higher to go in gold. And gold's really been a funny, it's been really strong, but it's been a very, very slow, steady breakout. So, and that may just mean that it has quite a bit of strength behind it. I mean, you used to see things like gold would move $50 in a day. We haven't seen that. Gold has moved $100 off its lows in 2.5 months. So it's something like that. So it's a bit of an unusual mode for the metals to have this slow grind, but slow grinds are fairly bullish. So we're not going to fight it. We haven't seen anything like the giant sell prints that we think we would see at a reasonable high. So if metals are about to put in a significant high, we're going to see some serious volume on these because we saw serious volume on the lows. I mean, we're going to see prints of multi-millions of shares. Okay, SLV, same thing. We don't have the sell prints, so we could stay bullish until we see those. So 17, 18 level, we'll see what happens. But buys on the lows, and every time we have a flat correction or a dip, we get more buys and no corresponding sells yet on silver. So SLV ETF. Okay, energy space, no surprise, big mess. UNG chopping around, some accumulation here, but not huge prints yet, to be honest, and showing weakness today. USO, definitely someone sold this area and we dropped immediately from it. No corresponding buys yet. We'll be waiting for those to clear up the oil picture. I wouldn't take a USO or oil long trade until we see some significant prints on lows. Okay. New feature. Just a quick video to introduce this. So we decided at Data Trader Pro to put to get more into individual stocks. Some people have been asking, some of our users have been asking us to do this. So it's something I also wanted to do for a little bit of time. So we're charting all the major market stocks. And what are the major market stocks? They're anything in the S&P, NASDAQ 100, or Dow. So it's a little over 600 stocks combined if you remove all the duplicates, and there are a lot of duplicates. And then ETFs, we're doing the top 100 ETFs by volume, but a few of those issues are not very relevant and don't get very many block trades. So it's a little over 90 top ETFs. Pretty much anything important to the market we're tracking. And these are searchable, sortable. You can do by symbol, by time, which is default, by volume if you want, see what the big trades are, etc. Right? So on either of those. So yeah, so that will update automatically. Of course, for our regular listed charted block trade tickers, our major sector tickers, we have the alerts feature. And yeah, so if you don't subscribe now, have a free trial. We're quite inexpensive, I think, $35 a month. So you can get a lot of information from the block trades, from the charts, and from the stock scanner time and sales here. So anyway, that's it for our morning wrap on Wednesday, February 8th. Thanks for joining us, and we'll see you soon. Bye-bye.